What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 12th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to take a look at not only price, but also a few data science models, and really talk about three things that have me hopeful for Bitcoin, but also three things I'm going to be watching out for that I want to see follow through in price and also in the data as well. I want to try to be as non-biased as I can talking about this, as it's a very important topic. So this is just going to be a lot of stuff that I want to toss to you guys to keep an eye on. It's not foolproof or anything like that. And along with that as well, towards the end of the video, guys, we are going to have a sponsored review for Unstoppable Domains. So definitely stick around for that. But let's go ahead and dive into this video. So the first thing I want to talk about here, and the first kind of thing that has me optimistic about Bitcoin here, that I think really just kind of puts us in perspective as to where we are now in price without having to do anything crazy or intricate, is going to be simple price analysis. Now, I know a lot of people have obviously been looking at the market here ever since back here in June, and we've been seeing about, again, you have a breakthrough month here in October where we actually had a green month, but for the most part, we've been at about a 6-month decline here, or at least we're working towards a 6-month decline here in December if things continue the way they are. It's been relatively boring. I know it's made a lot of people lose faith in crypto and Bitcoin in general, especially if you've had a mixture of positions between Bitcoin and altcoins. I get it. But the thing is, right now with Bitcoin's price, the reason Bitcoin is correcting like it is towards around 7,200 is because during the time frame in which we've gotten back up here from the bottoming or the accumulation phase around 3,100, we're actually pretty much on pace for where we should be. We were in fact way overextended back here. Now I've drilled this point before, but I thought today I might as well go ahead and show you what that looks like on the chart, just to really kind of bring it home here, right? You can see it in data science models, but the best simple way to do it is to use a simple tool here called the bars pattern tool on TradingView. And this is really cool. You can basically draw it over any segment of price that you want here on the chart. Now, I think the best and fair way to do this would be to simply take from the last cycle, for example, and also the previous one before that, the previous price action, okay? And I'm going to really drill a point here, okay? So let's go ahead and simply click here on February. I'm going to avoid using the wicks here, so I'm not going to use January here. It just kind of distorts in that case. It's very odd looking. But if we take a look here, right, at the general kind of bottoming range here from February of 2015 all the way up to December of 2017, take a look at when we overlay this on the chart here on the same month from when we set our bottom. So what does this show you here? Well, it shows me a few things, right? Ignore the fact that this is going over a resistance line of our parabolic resistance line here, because we're not going to have the same multiples we had last time, guys. Let's just be fair. And it's not going to come in that short of a time frame. What's interesting, though, is that it showcases us that our accumulation phase was extremely short. We exited out of that accumulation that phase stronger than pretty much any past movement, or at least much greater than the last cycle. And we're now coming back into a much more normalized range, whereas, again, we should be riding up against this parabolic line of support here on the logarithmic chart, and we can start moving up for higher cycle levels later on in the coming months. Now, I want to make it very clear, this doesn't mean it's going to take all the way until February of 2021 for us to get back above 20,000, and it doesn't mean, again, that we're going to hit 100,000 here as early as September 2021. I'm using this as an example to showcase how cycles can differ, right? For example, as well, if we take a look from the bottom here up to the high of the last cycle, this cycle was much quicker, right? Very similar in nature to what we had beforehand, where things went extremely parabolic. And again, the multiples are going to be much different. So you would probably want to shrink these charts, but of course on the logarithmic chart, it's very difficult to do that. It looks really wonky. So my point still stands in this case, guys. You can do this for yourself, and you can also use it in other markets in this case. Just make sure that when you do it, you keep on the same chart. You don't switch it from logarithmic and do all this stuff. It can sometimes mess it up. But the major point here stands that this cycle, we were overextended, not to mention on a much larger market in this case. And the point I want to drill here is that these cycles, if anything, are likely going to get larger in this case. You can see that they've gotten longer over time. As we're getting into larger markets, you need much more liquidity. It's much more pressure in order to get price higher. And along with that as well, not to mention, when you start to get into these markets where you're working with lower multiples, it's just generally market to scale in this case. It starts to get more difficult to grow out in this case. Okay, so just bear in mind that we're going to have lower returns. My target for this cycle is around 100,000, which is still pretty great. I mean, if you talk about an asset being $7,200, going more than a 10x over the next few years. I can't tell you any market that's going to do that, even gold, silver, stocks, anything like that. All right, so the other second positive thing I want to talk about, and then we'll dive into the third one and talk about some other things that I'm a little bit concerned about, or at least I'm keeping my eye on. This is the 200-week moving average heat map. This basically showcases the basic growth, in this case, the monthly increase of the 200 weekly moving average. So this purple line here, right? As you can see here, during these months where it's starting to really move higher, you can see that we have a higher shade of color here on our spectrum that usually is around red or green or yellow or orange. And this basically signifies that the 200-week moving average, this longer-term moving average, is really starting to account for a lot of increase in price. It's starting to factor in a much higher range of weekly moving averages as it's, combining in 200 weeks worth of price. We can see here, though, if we take a look back here at history during the exit out of the accumulation phase, we're exactly where we should be, right? It's increasing at this nice steady rate here, and until we get back above the highs of the previous cycle, so that would be the equivalent of over here, right? Around, you can see actually my line is charted pretty much exactly there. We had basically one or two blue circles left, and after that we started to really move into parabolic levels. So this chart here showcases we're doing fine. In fact, you can really see here on price against the moving average here, the 200 week, which we've talked a lot about over the last few years on my channel. It's a very important moving average, not to mention especially on those weekly time frames, especially on Bitcoin. You can see here we made support on it multiple times. Perhaps we're going to push sideways here for the next month or so and maybe make second contact on this like we did back here between January 2015 and October of 2015. Wouldn't be that far-fetched to think that we might get a second tap on this, and it's just a matter of letting that moving average catch up. I don't know. I don't want to sit here and make claims like that, but it showcases we're completely fine where we are, guys. Again, overextended, exiting the accumulation phase, and now we're on the beginning trend here to retest the highs here at 20,000. That's likely not going to happen, though, until we have the halving in May. The third thing I want to talk about is the Powell multiple, and this basically has to do with daily Bitcoin issuance. It's basically talking about how much USD worth of Bitcoin is being mined every day and dividing that by the 365-day moving average of daily Bitcoin issuance. So taking that same value we're taking at today's value and taking that record of the last 365 days, like how much Bitcoin has been issued over the last 365 days on average, and dividing that by the current issuance. And you get this multiple here. Now you can see here, as we were starting to exit from the lows here around 3,200 up towards, we really went up to about nearly 14,000. The Powell multiple shot up here. And the Powell multiple in this case is going to increase because, well, on the daily time frame, we're issuing a lot more Bitcoin than we were when Bitcoin was at 3,000 in the sense of dollar value, right? It's probably the same amount of Bitcoin on a daily average. We have a very predictable supply increase every single day, but at the same time, the dollar issuance in this case was larger. The price of Bitcoin was bigger. And you can see here that this has played very well, not only as a bottoming indicator, but we can see some consistencies in the trend as we exit out of the accumulation phase, as we get out of the bottom here in markets. Notice how after we start to have this rally here to around the 2.2, 2.4 range, like we've had every single time here, as we saw over here, here, and here, we also have a decline. And usually come down anywhere between the 0.6 to 0.8 range on the ratio. So we can see over here, 0.6 to 0.8. And right here, we're now down at 0.8, a little bit higher than 0.8 at the moment. So we're getting very close to being back at the ratio we used to be at. So this probably means in this case that we're going to hang around this range of 6,000 to 7,000. In this case, can maybe come down a little bit more. Who knows? Maybe it won't be exactly. Maybe we won't go down as low as we've used to. But long story short, the point here is we're on pace for where we should be. In fact, these are at very similar time frames. Take a look here on the chart from November to December and January of 2012 and 2013. That's where we were here in this ratio. Take a look over here between July to October, right? The same range here. This is where we were seeing it. And now we're here in November and December, very similar to the time frame we're over here, right? So it could be that we're here for a very short while. It could mean that we remain here for a few months. Who knows? But the interesting thing here is that this is playing very similar to what we saw back in history, and these are during those periods of time where, again, we were factoring in things like the halving event, right? We were starting to consider that the supply adjustment for Bitcoin was going to change or had changed, right? So it's very interesting to see how Bitcoin repeats these cycles, and when it gets to these overextended ranges, we can be pretty confident the price is overextended. And it's become much more clear here, much more shorter time frames that we reach up into this range. So we can actually use this much more as a confident indicator for bottoms and tops. But again, it's not foolproof, right? So these are some really interesting indicators. And I know I've talked about the stock to flow model. I would say that and a lot of other ones are just as important, but I've already talked about that a lot. So I wanted to provide something new to you guys. I wanted to showcase something new and also take a deeper dive on these different data science models. Now, I want to go ahead and talk about 3 things that have me a bit concerned, okay? The first one is Bitcoin network momentum, okay? This is very similar to NVT, and this is basically taking the amount of transactions over the Bitcoin network. This is a little bit different than NVT, which is factoring the amount of transactions over market cap. This measurement of Bitcoin network momentum is literally just a median of daily volume over the last 60 days, okay? Not a complex indicator. So it's going to showcase you here how much Bitcoin is being sent over the network here. And you can see, some days, back here, we had 370, 380,000 Bitcoin, 400,000 Bitcoin being sent in a day, back when Bitcoin was, a few $100. And nowadays, something much smaller. And the one thing about this is that compared to history, we should be at this period of time seeing much higher levels of Bitcoin volume in this case as we're exiting out of the accumulation phase. In fact, we had more back here back in 2012 and also back here between 2016 and 2017, right? We maintained that level for a good amount of time as we went through the bull market. But there's a few things to keep in mind here, right? As much as this is a concern here, I want to see network volume on Bitcoin. I want to see people using the base protocol and utilizing it for transactions. There's 2 things to keep in mind here. Again, I don't want to be biased, but there's 2 things that are important to note. In fact, here on Looking at Bitcoin, they actually state more Bitcoin is being held off-chain on exchanges. Growth over time of layer 2 solutions such as Lightning Network will mitigate this. This is a similar concern for NVT. And more Bitcoin held en masse by third-party companies who allocate their clients' purchases within their large wallets is going to diminish the amount of network volume. And this kind of proves to more of the bigger reason why this indicator might lose relevancy over time as well as NVT. The selling point for Bitcoin is that it is a store of value, that it is something that you don't really want to send as a form of payment. I think people have kind of determined that right now. At least initially, it's going to become a store of value. And then as it becomes less volatile over time, maybe it can be used for payments. It can be a deflationary currency that we use for payments. Who knows? It's something we're going to have to figure out in the future. But for now, the argument stands that as Bitcoin has been profitable for about 88 to 89% of its entire history to purchase into Bitcoin and hold, either at the same rate of money that you purchased it at or up, that means that it's really selling in the case of a store of value. And the deflationary nature of it kind of speaks to that. So that's why this indicator doesn't scare me. But at the same time, I would like to see maybe some increase here of network volume. I would actually say, in fact, as well, perhaps some people would make the argument that it's actually good that this is lower because if this were to increase, this would mean that people aren't holding their Bitcoin, right? You can see here during the accumulation phase, it started to increase here. Perhaps this was people starting to sell on market, who knows, right? We could have different perspectives on it, but this is generally showcasing something that might be negative for Bitcoin if people see it as a benefit to be a peer-to-peer digital currency. The other thing as well is the golden ratio multiplier, which takes in the Fibonacci sequence. And it basically multiplies the 350-day moving average by different segments of the Fibonacci sequence, right? We can see the different values, 1.6, 2, 3, 5, 8, 13, and 21. And if you guys know, if you've used the Fibonacci retracement, these should be relatively familiar to you to some degree if you understand the principles of the Fibonacci sequence. But we can see here that according to history, we've actually held quite well after we broke through the bottom line here. This is the 350-day moving average. It tends to be that we actually stayed above there and continued higher and really ranged in within the green and red lines. However, we kind of overshot ourselves in this first rally here. And because of that, we've had a pretty harsh correction down here, which we haven't seen, where we haven't dipped actually down below after exiting the accumulation phase since back here in 2012. So I'd say that this shows a little bit of inconsistency and the kind of healthiness of the trend here. We kind of overshot ourselves earlier, now we're having a more stark correction, and that's reflected here within the golden ratio multiplier. And again, the interesting point here that I want to highlight and why it's valuable is that the golden ratio multiplier is an effective tool because it's able to demonstrate when there's overextensions in price, when it's overstretched or likely overstretched in this case, in the sense of the adoption curve and market cycles. I think they worded it here really well on Looking at Bitcoin, and I think it's a very important point to take in mind here that we were overextended. And if anything, this showcases that we might have had a little bit too much over kind of optimistic excitement in the sense of buying or FOMOing at price. Perhaps it could have been a long-term short squeeze or multiple short squeezes. Who knows? But again, the major thing here is that we shouldn't have hit the I think this is the the 2 times multiple on the 350 day. We shouldn't have done that so early, but we did, and that's why we're coming back down for a more stark correction. The last thing I want to talk about here, in the sense of price, and I'm actually going to have to adjust my chart back there, is something here on the chart. I know there's so many advertisements on TradingView. The major thing I want to talk about here is volume. So between the years of 2011 and 2015, we actually had an increasing volume for Bitcoin. And now we've been seeing a declining trend from 2015 to almost stepping into 2020, where over the last 4 years, throughout 2015 to 2019, we've had declining volume. And in fact, just like on the uptrend of volume, it's very consistent with the highs at the downside. We basically have built a triangle, a pyramid of some sort with volume. Now, the one thing I want to talk about with this is, again, very similar to the network volume for Bitcoin. Question here is whether or not this is good. Now, I'm using BLX, which is taking in the vast majority of real liquid exchanges for Bitcoin. This is giving us probably one of the best measurements we have for real exchange volume at the moment. Right? So the question here is whether or not we are in a position here with volume declining, right? If this continues, is this going to be good or bad for Bitcoin, right? And again, you'll hear different perspectives. I'm just going to simply provide them to you. I'll provide my opinion as well. The 2 different opinions here are that if volume is declining in this case, right, the positive side would be that, oh, well, it's because people are holding their Bitcoin, right? So we're not only saying that people aren't sending their Bitcoin on the prime network, in this case, the actual Bitcoin network. We're seeing declining transaction volume there because people are hodling. They're also hodling on exchanges, and they're not using it in any regard. They're just storing value in it. So they're holding on to it because of its limited supply and actually finite supply, and the fact that it can provide as a hedge. Right? So that would be a pretty good perspective. And I have to say, again, yeah, you can say I'm biased, guys. I completely understand it. I do kind of agree with that because really right now there are not many other things you'd want to do with your Bitcoin outside of maybe trading for more Bitcoin with some altcoins in this case. Or, stepping out of your Bitcoin in this case to go into an opportunity you really do feel is more genuine and better in the market, right? And we've talked about some of those altcoin positions. But outside of that, like the whole idea is I want to hold my Bitcoin. I want to have a hedge against central banks. I want to have a hedge against world governments and world currencies. And I want to hold something that can help a lot of people in developing regions of the world where their currencies are not stable and where they might not have access to banking or some form of wealth preservation in a digital manner, right? So that would be the positive side. The bearish side would be that in this case, people are just uninterested in Bitcoin. No one's buying your Bitcoin in this case. And I think a lot of people would feel that, especially during these times where prices been down. Now, I think that that's a very fair point here. Maybe, we don't have that next wave of retail adoption. But the one thing I'd say is that volume isn't really much distant from where we were in really the grand scheme of things than what we had back here during these April periods, right? Even though we were setting a lower high, that kind of volume led price to going that high. So I'd say that it's not so much a lack of interest, but I would say that I think it's a balance between the two. We are certainly not in the full next cycle. We won't be until we pass 20,000, until we go through the halving event. But at the same time, I think that the reason for this decline in volume, even though I think we will see a break higher eventually outside this line and really possibly start a new wave of higher volume levels, I think the reason for it is because a lot of people are just simply holding. They're holding it for the long term. They've got a little bit of exposure. As we talked about earlier with the Bitcoin volume indicator, the network volume, it's a lot of people, funds, it's people, everyday people, retail investors, whales as well, some potential miners, not many, who are just holding it. And also the lost Bitcoins, the 4 to 4.5 million that they're gone forever. They're never going to come back. I think it's about 4.2 million from last I checked, but we don't really know the official statistic. It can vary. But those are the kind of 6 things I wanted to highlight today, guys. 3 more positive, 3 more kind of negative and concerning, or at least something quite neutral. And I wanted to be a little bit, less biased here and just kind of show you guys those different perspectives. But if you got something else that you want to talk about, guys, do you think that I should check out or others should check out? Leave it in the comments and drop a like on this video if you liked it. I always appreciate it, guys. I hope you all enjoyed this video. That being said, let's go ahead and dive into the sponsored review of Unstoppable Domains. Alrighty everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Unstoppable Domains. Now, many of you have possibly heard about the buzz in relation to Unstoppable Domains, but for those of you who are hearing about them for the first time, to put it simple, Unstoppable Domains is pioneering a new asset class, a new asset of domains that can be purchased and owned by users on blockchain networks like Ethereum and Zilliqa. Now, I want to go ahead and talk about why this is powerful here. A lot of people, I think, struggle to understand the concept when they look at projects like Unstoppable Domains and a few of the other startups in this space, in the crypto space, that are really pioneering this. Why is it valuable to own a domain, in this case, on a blockchain? Well, there's a few things here. First off, you can have a sense of self-ownership, whereas traditionally you're going through GoDaddy, Bluehost, all kinds of different website hosts who at any time can strip you of your domain, in this case, if necessary. But along with that as well, it's the second portion here, right? It's not just self-ownership, it's censorship resistance. Basically, with Unstoppable Domains, with the .zil or recently launched .crypto domains that you can buy here on Unstoppable Domains, you're able to have ownership over a domain and no one can take it away from you. This is very, very unique here because there's two major use cases for this so far that Unstoppable Domains has already promoted. Censorship-resistant websites is already huge. To be able to have a website that will allow for free speech or for allow people to have freedom of expression or to be able to make transfers or utilize certain cool technologies that might be tied to the cryptocurrency space, all of that is really ingrained in the philosophy that I believe in personally, right? A free and open web. I think that's really cool. But it's not just that as well. The Unstoppable Domains that you can purchase can actually be utilized for payments. So you'll not only see in this case that many people have utilized it for websites, but they're also utilizing it in a variety of their different partners, which can be wallets. So you've got, for example, the Atomic Wallet, you've got Trust Wallet, which is Binance's official wallet, and Coinomi, which a decent amount of coins and people use. So now within these wallets, when I'm sending money, I don't have to send out a long stringed address. I can tell you guys, we are definitely in the .com days of crypto when we're still using addresses to transact with one another, and we don't have some form of a username to send money to one another. Well, within these wallets, you can utilize your Unstoppable domain. You could, for example, if I owned datadash.zil or datadash.crypto, you can make donations to me if I own those domains, right? And the really cool thing about Unstoppable Domains is they've actually gone about protecting a lot of the key domains. They have like Datadash protected in this case, and a few other individuals, probably like big company names. But you can find all kinds of different things. So I tried, for example, the future is .crypto. Now, sadly, when I actually did the search here, the future is .crypto is already taken, right? Someone had a very similar idea to me to pick up that domain. However, the future is .zil is available. So if you're a big fan of Zilliqa, you could pick up that domain, right? And you can see here they market around $20 in this case per domain. But again, what's basically happening here between the .zil and .crypto domains is for the .crypto domains, they're basically storing it on Ethereum in this case. And along with it as well, it's on Zilliqa if it's .zil. So it's utilizing a variety of different protocols in this case. And now anytime that I want to make an Ethereum-based transaction, or if I want to, for example, receive different forms of crypto, I can use this across a variety of different wallets. It's very fascinating. I think the concept is definitely going to be groundbreaking if it really takes off. I think the interesting thing about this is that it's at least setting the standard here that there may not be not only a multi-billion-dollar asset class here for blockchain-based domain names that have yet to be tapped into, but along with that, it showcases the kind of power here of building a much simpler system to send money and also a framework for censorship-resistant websites. I think that's going to be game-changing alone in and of itself. But for those of you who are interested and want to learn a little bit more about Unstoppable Domains, you can definitely check out the link down below in the description. I think there's a lot of interesting things about it. They're a San Francisco-based startup. They've been one of the most kind of like prominent up-and-coming ones in the crypto space. They've got Draper investments inside, as well as Boost VC supporting the company. A lot of big VC names in the crypto space. And I think they've just got a lot of things coming for them in what may be another extension to the ever-growing domain market of the web, as we continue to see the web and our interfaces to the web continuing to grow. Anyways, I'd like to hear what you all think about this. Feel free to leave a comment on it down below if you guys think Unstoppable Domains is cool, if you picked up a domain yourself already, or if you're looking to pick one up. That being said, though, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.